Hello and welcome to the first episode of Financial Instrument Analysis. Today, let's start by examining the chart for gold. Regarding the trend this week, we are in a downtrend until Thursday when the price broke above the blue smooth moving average and started to rise. The price has been below the weekly middle pivot for most of the week, confirming the downtrend. The only breakout occurred on Friday, which could indicate a change in trend next week. Now, let's take a look at gold's behavior on a larger time frame. As you can see, the price is still in an upward trend this week. There was a slight attempt to break the trend, but the price reached the red trend line and bounced off it, staying within the downtrend. The daily averages are currently in a downtrend, but a change in trend is possible in the near future. Currently, there was a long position available after the rebound from the lower average. The price is slowly moving towards the first upward pivot. On the hourly time frame, a short position was possible after the average was broken on Friday. This position was closed when the blue average was breached. The entire week, the price gradually fell below the average until the breakout on Friday, signaling a continuing uptrend until today. This suggests a slow change in trend, and I would consider long positions here, preferably with a stop loss slightly below the middle pivot. On the 5-minute time frame, short positions were available from Monday until Thursday, and after that, one could look for short-term long positions against the trend after the breakout. As long as we don't change the trend, meaning the price would have to go below the middle pivot to around $19.15, we have an uptrend, and I wouldn't look for any short plays, only longs. We also have a strong support point at $19.30, where the price bounced several times. If this level is breached, it could signal further growth. That's all for gold in this episode. Now, let's move on to oil. Regarding the trend, we have a clear upward trend that has been continuous for 3 weeks. If we had only played long positions from the beginning of the trend, we would already have a profit of around 15%. The price hasn't significantly dropped below the trend's moving average. Last week, the price soared to the third upward pivot, and this week it has already broken it. The trend remains unchanged, and I would consider long plays only, without any breaks in the trend line. From a higher time frame, we can see this strong growth and a possible entry position after breaking the averages around $82. The price is rising and is already near the support point at $94. If this point is breached, we can expect further increases. The averages are still overlapping, but in the next week, we might have an upward trend on the daily time frame. Regarding positions, I would wait for some retracement, perhaps to the middle pivot, and then look for long positions for further increases with a take profit around $100 or higher. On the 5-minute time frame, we had several opportunities for long positions. Only on Wednesday, there was a slight correction, but consistently playing long positions would have yielded several profitable trades. As for support points, we have $89, the middle pivot point, and breaking this point could indicate a trend change, and $94, which, when breached, could signal further declines. That's all for oil this week. Next, let's take a look at the S&P500 index, which was mostly in a sideways trend last week. However, around Thursday, it broke upwards to the first upward pivot, only to fall below the averages again on Friday, bringing it back to a sideways trend. Nevertheless, there's potential for a downward continuation. The averages are significantly apart from each other, which could enhance further short-term declines. It's best to enter short positions after some price rebound to reduce the stop loss. For the upcoming week, we can anticipate a correction and a potential short entry in the short term with a stop loss around the averages. It's a short-term position because if we look at the daily time frame, the trend remains upward, indicating that the hourly chart situation is a short-term correction. Currently, it's also a good time for long positions for the longer term because we recently bounced off the average and further increases are possible. As for support levels, we should watch the last peak at $4,600. If it's breached, we can continue further increases. As for support at $4,300, after breaking the averages, could signal further declines. On the 5-minute time frame, we had the opportunity to enter long positions on Monday and close them on the breakout of the average on Friday. Now, let's take a look at natural gas. Here, we also observe an upward trend. The price of natural gas rose to $2.75 and then rebounded from the first upward pivot, undergoing a correction towards the lower averages. However, in the new week, the price returned to the upward trend and has remained above the middle pivot, indicating further strength in the uptrend. On the daily chart, we see a slow upward movement, but the trend is still downward. The averages are widely separated, reflecting the significant drop in gas in recent months. If I were to play a position, I would try a long position with a stop loss a few pips below the average, with the expectation of a rapid price increase. In terms of key points for gas, the last peak is an observation point. If it is breached, we can expect further increases. As for the support point at $2.05, the price has rebounded several times, making it a potentially strong level if the price drops to that range. On the hourly time frame, we had a good entry point on Monday, and it would have been wise to close the position on the average breakout on Friday. In this episode, that's all for natural gas. Finally, let's take a look at silver. We had a 2-week downward trend in silver, with the price falling until Friday, when there was an identical breakout to gold, albeit slightly smaller as the price did not break the red average. However, the price is slowly moving towards a sideways trend, and in the current week, it should become clear whether we will have an upward or downward trend. Therefore, on the hourly time frame, I do not foresee any positions. I would only wait to see which direction the price will move. On the daily chart, we have an upward trend, but it's a small one and is moving towards a sideways trend. Like on the smaller time frame, I would not currently open any positions and would wait to see which direction the trend will clarify. Alternatively, a small long position could be taken after a breakout, with a stop loss below the averages. Regarding support points, I would look at the first upward pivot, which is around $23.05. After that, I would look for longs, or if the price breaks both the average and the middle pivot, which is around $22.08, I would look for a short position. On the 5-minute time frame, there were also several possible long or short entries. However, the trend was not well defined, so I wouldn't expect high-value plays because we didn't have an advantage from a clear trend. Alright, that's it for today's market analysis. If you enjoyed the content, please leave a like and consider subscribing to not miss the next analysis. And I encourage you to watch my previous episode where the main cryptocurrencies like Bitcoin and Ethereum were discussed. I also encourage you to download my free ebook on how to trade effectively in the stock market. You can find the link in the video description. If you have any requests for which cryptocurrency to analyze in the next episode, feel free to leave a comment. That's it for this episode, and until next time, see you soon and have a successful trades.